Should you buy American Express stock, ticker symbol AXP? We're going to be looking at the fundamentals of the stock, then giving my fair value based on discounted free cash flow and the Buffett Graham intrinsic value. And why this is a very interesting stock as well, well, it's one of Warren Buffett's favorite stocks. We're going to be touching upon that as well, how much of this he owns and why this is a good company to buy potentially in 2021. So first, let's have a look at the share price. You can see it is at $171.72. And it is pretty much at its all-time highs. If we just go to the all here, you can see it had a crazy run up after the pandemic, did hit its all-time high at around about 190 and has a slight pullback since then, but we're going to be looking at this to see if this is a buy. Now, I did mention Warren Buffett. Here we have the latest 13F holdings of Berkshire Hathaway, and you can see the American Express company is the third largest position that he has with a value of around about 25 billion, which means that Warren Buffett and Berkshire Hathaway own about 19% of this stock, 90% of the total stock of American Express, and it actually makes them the largest shareholder. So if you're buying into this, you and Warren Buffett are thinking alike. So that is obviously a very good sign. So let's have a look. Well, we're not going to look at the values yet. First, we're going to look at the fundamentals. So American Express has a market cap of 136 billion. Share price is $171.49, 52-week low of 112, and its all-time high of 189. It pays a pretty nice 1% dividend, 1.01 to be exact, and the ex-dividend date is the 6th of Jan. So buy before then if you want the dividend. So first, can you give a like on the video? And let's just get straight into it. Is the P ratio less than the market? Yes. American Express has a pretty low PE ratio of 17.95 to 28.5. And one of the interesting things here, if we just compare this against some of its competitors, you can see we have Visa here, which has a 36 PE, and MasterCard, which has a much higher PE of 42. So definitely below them. So that is a very, very good start for American Express. Next, is the revenue increasing? Yes, it is, but not massively. 38.5 billion to 40.2, but a pass nonetheless. Then, is the profit increasing? Yes, and it's increasing more than the revenues increased. 6.7 billion to 7.6, so that is a check mark again. Are they buying back their shares? Yes, they are. 883 million to 805 million. So are we about to get a clean sweep in terms of the steps? And the answer is yes. Free cash flow is increasing, 7.6 billion to 11.6. So overall, that is 5 passes, and the free cash flow ratio is pretty tasty. 136 billion market cap, 11.6 in free cash flow. That is 11.72 free cash flow ratio, lower than the PE ratio, and it has a very safe dividend. Dividend is 1.3 billion a year, and they have 11.6. So looking pretty damn good so far. Now, let's get on to the valuation of the stock. We've calculated the future free cash flows of the company, and this will give us a potential value of future free cash flows. So if we have a look at that here, firstly, wow, well, there you go. Calculated stock price of around about $263.85, which means it's at a massive discount at the minute, $53 discount. And this is with pretty conservative numbers as well. That would give it a $200 billion market cap. And now let's have a look at the Buffett Graham intrinsic value. This takes earnings per share and expected growth rate into account with obviously their bond yields. And analysts think this is going to grow pretty heavily over the next 5 years, 43%. And this will certainly show that in here. Wow, there you go. A fair value of $951 and a Graham price of 713. So that is crazy high. But is it possible? Well, currently the actual stock price, we'll just even it out to make it easier. Say it was $200 a share. That means that it would double and then double again. And if we look at the market cap, well, then that would give us a similar, sorry, let me just find this again. So we would have probably a $600 billion market cap, which would make it more than Visa and more than MasterCard. But if you look at their market caps, the stock definitely does have room to at least double, and in Visa's case, triple. So I don't think these, despite them being that high, are too unrealistic. I mean, this 263 looks pretty good. These may be a little bit high, but maybe the expected growth rate is too high. Let's just say they grow at 30%. That would bring it down 25% once again. That would bring it to that level. But it seems that it's undervalued according to both of the models. So that is definitely a very good sign. Let's just have a look at some of the technicals right now. So we'll just add in a moving average, and we'll add my usual, not an exponential. We don't look at exponentials here, but they are a good tool nonetheless. So we'll add a 50-day in the green because that is the shortest moving average we're going to look at. Let me just add that in here. And then we want the 100-day. Oops, sorry, my trading view has been a bit weird. And now we want the 100-day in yellow. And then we'll finally want the 200-day in red. And then we've added that there. We want that to be visible. And then finally the 200-day in red. So what are we looking for here? Well, we're looking to see any bullish price movements, any areas of resistance. And you can see that basically the line, the price has been over the shorter moving average for a long time, which is a pretty bullish sentiment overall. But you can see now the price has dropped below the 50 and 100-day moving averages, which would be a bearish sign. But if we look at times when it's done that in the past, it did it here in February and then shot back up, and then it did it here in August more recently and then broke through those as well. So that is a negative, a bearish sentiment right now. But when American Express has done this, apart from in the pandemic when it hit everything pretty hard, when it's done this over the last year, it has broken through them pretty quickly. Only crossed below the 100-day recently, so that is once again a bit negative pressure, but overall looking good. Then we'll look at the RSI, which is the relative strength index, and we'll look at this on a bit more of a longer, a longer range. And you can see here, we'll go even to the weeklies. The stock is in a bit overbought regions again, which is a negative, but it is coming back down to that region if it does get oversold. And the only time it's been horribly oversold was in the pandemic on the weeklies, and then again in 2016. So if you do see American Express in the oversold region, obviously buy it at that point. But yeah, not looking too good on the RSI either. Probably a bit on the high side. Even on the dailies, it's coming back down, but weeklies, I would say, is a bit more of a telling indicator for the long haul, and it is in the overbought regions. And finally, what we'd like to do is look at the MACD, if I could spell it correctly. MACD, there's no R in MACD, as I'm so typing there. And let's just put this back to the daily range. And well, it's been all over the place recently. But once again, bearish sentiment here. You can see the signal line and MACD line have crossed, which is why it's red. But then also the line has gone below the zero line here, which is once again negative. So overall technical saying that the stock is not a buy right now. What you do is you'd short it or something like that. But overall, I would say the fundamentals of the stock are very, very solid. If we just quickly go back to there, I mean, calculate stock price of $263 on a discounted free cash flow, and this was the conservative based on analyst estimates of around 400 to 500, which are very achievable if you compare them to the fellow companies of Visa and MasterCard. Right guys, thanks for watching. Please give a like on the video and comment down below on your thoughts, and I'll catch you guys next time.